worries. This is Esther Tanez, owner and founder of Esther Inc. Insurance Agency. And we're back with the journey of entrepreneur. Today, we're going to talk about the last section called funding. And I have my friend here, Anna Masker.
Hi, guys.
Who is the owner and founder of Profit Point. She is a CFO for hire. And what a better person to talk to, right? This is the right person to talk to. But I want to make sure that you guys have your notepads or iPads or your laptops, whatever you have, so you can write this great information. So I want to talk a little bit about Anna. And Anna does all of our finances here in our office, make sure that we're writing compliance and everything is doing well. So Anna, tell me how long you've been in the Profit Point business.
So I founded the company 10 years ago. I can't even believe it. It's been a great ride. So
fantastic.
Yep, and we love working with you, Esther.
Oh, sometimes not so much. But tell me, Anna, some of the services that you offer.
So we offer CFO services. We help businesses do budgets and forecasts. We help them manage their accounting in a controller capacity. We do KPIs and analytics for businesses. Businesses that are growing fast, but they're too small to have those people in-house.
What's a KPI?
A KPI is a key performance indicator. It's something that you want to use. It's one of those few metrics that you want to use to run your business more effectively.
So hi, Sonia. I'm glad that you joined us. So make sure, again, I'm going to announce it over and over. Make sure you have your notepads. This is crucial information. If you're starting a business or you're already in business, you need funding, you're in the middle of a project, you can't finish, you're growing too fast. What types of loans? How should I calculate? Who should I hire? Anna Masker. I'm telling you, hire Anna Masker.
I paid her for that.
Because I think that you definitely want to make sure you're dealing with a professional. We will give you a lot of tips, but you always need someone that really knows what they're doing and really can analyze at a global perspective, all the areas. So anyway, are you guys ready? I'm ready. Hi, Lourdes. We are going to start with the first question. And the first question is, what are some of the things you need to consider when looking for funding?
Well, in our world, we look at three things. You want to look at how much money you need, what kind of funding you want to get, and then at what point will you need it. So how much money you're going to need is really important for you to know when you decide to go to a bank or to a private investor, how much you're going to ask for. So you don't want to look ridiculous in front of somebody if you ask for too little, or you're going to rule yourself out because you asked for too much.
Right.
And what kind of funding? We're going to talk today about some of the types of funding that's available out there, and the pros and cons of some of those. So you really want to look at, when you're doing your projections or you're doing your funding piece of your business plan, these type of things you want to look for.
So give me an idea of when you are looking for funding. Tell me, how do they calculate? How would they start to look at? What numbers should they look at? Or what expenses?
Yeah. I mean, the critical thing with funding is absolutely you have to have good projections. And when I say projections, that means financial projections built off of you through Esther's business plan topics you guys have kind of gone through. What's your target market? How many people are there? You're going to get some good metrics of what do you expect your sales to be? What do you expect your expenses to be? How much money? When do you think you're going to make a profit? So those are important things to put together before you even go for funding.
Correct.
And that's going to help you figure out how much funding you actually do need. So you want to look at put not only just a back of the envelope, back of the napkin kind of calculation. Really pull out a spreadsheet or hire somebody to help you kind of go through and really think about what it takes for you to sell your product or service, or what are the costs associated with it? What kind of people do you need? What kind of equipment do you need? What kind of location do you need? All of those are costs that you may or may not have the money in your own pocket to fund yourself. So all of those things, you put those down on paper, and then you start modeling out and looking at how when your revenue is going to start coming in, and when do you think you're going to start making a profit. And when you add up all of those deficiencies between when your sales come in and when all those expenses hit, that's going to get you closer to the number that you need to ask for. So you want to make sure that you kind of do careful calculations, because this is where people get into trouble. A lot of times our entrepreneurs don't ask for enough, because they didn't factor in how long it takes for things to start to be profitable and where the cash to start coming in on its own. Or they underestimate the cost of actually starting up. Like they may have missed, an important thing like insurance. A lot of our clients forget, oh my gosh, I have to factor in workman's compensation and general liability, E&O insurance. Depending on your business, insurance could be a significant expense. So those are some of the things you need to do to get all of those costs on paper to figure out what what I'll call your ask is, how much money you want to ask for. So,
can you believe it? Insurance is unforgettable, like so forgettable.
No, Esther's not forgettable.
I'm going to go to therapy after this. Insurance is very forgettable, and it's right. So just to recap a little bit, you're a small business, you're just starting, and you don't really know your costs. You need to go down your costs. How much is the rent? How much is payroll? Do you need very executive persons to working for you, or can you do entry level? Is the pay $10, $12? That's what Anna's referring to. She's talking about the fixed expenses that you have to pay, and then of course in the future we'll talk about variable and fixed expenses are very different. And what is profit? The average business takes 2 years before it can kick off. It took me 1 year and 7 months before I had money in my account. I talked about that if you've ever seen my interview. So just know that you need at least 1 year to 2 years of carrying costs. And knowing those expenses very defined will help you know what to ask for. And that's what Anna is talking about. So the next question is, how much money should an entrepreneur ask for,
Well, that goes back to that exact question that you were pulling together, you were talking about, is it definitely, you need to get a good understanding of all your costs, but you also have to show what you're going to be using the money for. So depending on the other person at the other side of the table, they are not going to write you a blank check.
No.
I mean, we all wish they could. No. They wish. But that doesn't exist in our world. So we have to have a good business plan to back up that money that you're asking for. And they also want to know what exactly you're looking for. Yes, Sonia, it's not an easy exercise at all. I mean, it does take a lot of time, and it does take a lot of discipline, but I'm telling you, it's going to be a great roadmap for you and your business if you do it.
Right.
And it also gives you a lot of credibility when you go looking for funding. People are like, oh, this person is serious about their business. They've thought through all the things. You don't want to get to the table and them going, what about, the insurance costs, or what about other expenses that you might have forgotten about?
Equipment, payroll, if you have an office, your desk, all of that stuff, all of those are expenses. What are some of the things that the bank looks at? Does the bank look at the owner's history? Is that a big factor?
Yeah, so the owner, typically banks will fund businesses that have been in business for 2 years. So if you're a startup, it's probably not the best source for you, because I think very, very few banks that I even know of will do anything less for a business that's been in business for less than 2 years.
Right.
But if you are going to a business, your personal credit comes into play. So you have to make sure that your personal credit score is decent. And they also will take collateral. A lot of times they'll make you co-sign your house as collateral, or unless you have something in the business that they can kind of say, if you don't pay this loan, collateral is, I'm going to take this. So if you default on your loan for your business, your house may be at risk when you go looking for funding at a traditional bank. The upside of traditional banks, and we're kind of getting into the sources of funding, but the upside of traditional banks is that they're cheaper than most other sources from an interest rate perspective. I think right now the interest rates are 6%, 6 to 9%, depending on your qualifications and depending on the size of the loan. So they tend to be better sources for established businesses, but they are still looking for those projections. They're going to look at your 2-year track history. They're going to look at your tax returns. So you want to have a good, strong financial history before you go to a bank as well. So they're less likely to use your projections. They want to look at history because they want to say, all right, I know what you may be very optimistic, but
so basically, you have to build a good history for yourself, making sure that you pay those credit cards, making sure that you don't have too many credit cards, because when you're there to ask for loans or some type of, there's different types of loans, they're going to look at your history. So learning how to run your credit and take care of it's fundamental. And yes, it takes about 2 years to build a business really strong. And this is why lending after 2 years it's the norm, because they want to make sure that you are stable and committed. Listen, I talk about passion all the time, but it takes a little bit more than passion. It has to, you know what? For me, I was against the wall. I had 2 kids to feed. So not only I love my product, but I had something that drove me. I had to feed these kids. So I had to make sure that this business stayed. Sometimes just being in business because you're in passion is not enough. So very important to have, all these pieces together. That's why a business plan is a good practice on what to look for, how to build the plan, who's my target audience, who am I going to market, how I'm going to market, what's the cost. All these things are very, very important. So listen, let's continue talking to Anna. And so you talk about, the funding, and then you said there's multiple different types of funding. Tell me, give our audience some options here.
Well, it depends. I mean, there's a couple different ways you can get funds. So we talked about traditional banks, which aren't necessarily the greatest for startups. So if you have a business less than 2 years, or a business or personal credit that's maybe not that great, or the business has already a lot of debt, there are other options that may be available. One is bootstrapping, and bootstrapping means you reach into your own pocket, pull out the money, and you pay the bills with your own personal funds. So that's what's considered bootstrapping.
I had $10. My bootstrapping was $10. But okay, go ahead.
Look what you did. So bootstrapping is by far the cheapest, because you only pay back yourself. You don't have outside investors.
No interest.
No interest, or you can actually do an agreement with yourself where you have a loan back to yourself, and there's some tax plays that you can do in there that I would recommend you talk to a CPA, not me. But there's other, you can also go to friends and family. So we call friends and family, these are typically loans. So if you have a rich uncle, which we all hope we do, or somebody who's interested in your business that believes in your concept, may be willing to give you a loan. The only thing I would say, make sure you have documentation around that loan, what the interest rate is, what the payback is, because especially if you're using friends and family, you really don't want to ruin a family relationship over a business relationship. No. So make sure everything is really ticked and tied and has that documented. We talked about bank financing, and then the other option is private investors. Mm-hmm. And this is limited typically to rapidly growing companies, and this is, you can either have what they consider angel investors, which are, they'll do smaller investments up to $50,000, $100,000, and then you have private equity, which do a whole lot more, up into the millions of dollars. Mm-hmm. And those are much more complex. They often require that you give up a piece of your business.
Like Shark.
Yes, like Shark Tank. Shark
yes.
Tank, those are investors. Mm-hmm. So that would to me would be your last resort, because you often have to give up a portion of your business. You also have, in many cases, to put a seat on your board of directors from somebody from the private equity firm. Yes. And then it also brings just a different dynamic. The upside is, if you do have a private investor involved in your business, you want them to be active, because a lot of times they have contacts
yes.
that may be valuable for you,
yes.
or they have been down this road before and they can provide a lot of advice. So there's some upsides and downsides to both, to the bootstrapping, to the private investors, and bank financing as well. So lots of different options.
So Anna, tell me some of the pitfalls, some of the mistakes people make when they're getting these loans, whether through a bank or through a private investor. What are the things that they're not looking at? What should they look at? The repayment plan back, all those little things. And because anyway, go ahead.
No. I mean, I think you're on the right track. I think a lot of times people first of all, they don't know how much they need to ask for, because they underestimate. And I don't know. I know about my business, and it sounds like yours too. It took me twice as long and cost twice as much than what I initially
had wrinkles,
and gray hair, right? So that's the big thing, is that you need to be prepared. because you need to think worst case scenario. I know all of us as entrepreneurs are very optimistic, and we always want to this is going to take off. Well, what happens if it doesn't?
Right.
And what happens if now you're saddled with $100,000 loan? How are you going to pay that back? Mm-hmm. So you want to, when you're running your projections, and this is why projections are the core of anything related to funding, you want to make sure that you have projections that are solid, but you run scenarios. So you say, okay, optimistically, this is where I think the business will take off. And then what if it doesn't happen? What if, what I say to my staff, my clients is make your mistakes on paper. Do your projections and figure out if the business turned into be half of what I thought it was going to be, what does that look like?
Right.
And then take it another step down. What if it was half of the half? What if it was a quarter of what I thought it was going to be? Right. And that's really a really important way for you to get a realistic viewpoint of, number one, if I get this money, how am I going to pay it back? Or number two, what happens if it doesn't work out? Correct. And so you want to make sure that you're going in with your eyes wide open, but also too, again, from a credibility perspective, you've thought through those different things before you go to an investor or a bank or whatever. Mm-hmm. And you can say, hey, look, you know what? If my business came in half of what I projected it to be, it would be, here's the scenario and this is what I would do with the money. And vice versa. So they want to know that you've thought through all the different perspectives and what things may go wrong.
And Anna's correct. I mean, as an entrepreneur, many entrepreneurs, we have the same personality. We believe everything can go. Yeah. We're positive. This can work. I'm telling you, it can work. But then we need to sit down and put our analytical hats on and be realistic. When the economy crashed, I had been in business for 7 years, and I didn't have an experience of how to handle when the economy crashed and people were canceling policies. They were canceling 70 policies a month. And I had no knowledge of, so what do I do? Do I let people go? Do I stop marketing? And let me tell you, I'll let you know in the future how bad the decisions I made that were so bad that almost got me out of business because I chose the wrong things to stop. But anyway, the point is that when you're planning and doing financial projections, you start to think about worst scenario because that's life. That's why I'm in the insurance business. I'm in the insurance business because I know life is going to interrupt you. That's why I'm here. But the reality is that sometimes you're going to have phenomenal months and years, and then all of a sudden, boom, the economy crashes because the government made a decision, or your industry changed the regulations, or your own industry become your own competition. Remember the airline business? People used to have travel agencies left and right, and I remember working for a travel agency back in years ago. But I mean, there are no travel agencies. There are barely any travel agencies because now the airlines kind of started competing with the travel agencies, and that can happen. And how are you going to evolve from that? What's your plan? What's your backup plan? The community when I started here was Black American and Puerto Ricans, and now it's Central America, South Americans, all different people from different countries. And so I needed to learn the style of communication, and there's a lot of shifts that happen, and you need to be aware of that. So I'm so excited. I think we're almost done. You said it was important to go through the need of funding. What does that mean? Is there anything else you can add to what we've been saying so far?
No, I mean, if I can just hammer home one more thing, it's just fun. Do your projections. Projections. They are the critical piece to making sure you're going in with your eyes wide open. And like Esther said, like if the market tanks or something like regulation in the financial services industry devastated that industry completely. Yeah. So make sure that you're going with your eyes wide open, and projections. Pull out a calculator and a pen and pencil, or pull out a spreadsheet and put them on paper. It's really great exercise for you as your business, putting all those great ideas and concepts that Esther's been talking about on paper.
So it's important that, and again, I'll repeat, go to someone that knows how to do this for a living, professional, because they can think of things that you're not going to think of. When we first start, we're excited about our product. We're excited about the color of the office. Today we are working out of Newark, New Jersey. I am so excited to be here because my staff is here. I don't get to see them much, and they're working really hard up front. And I'm usually at the Princeton office, and some staff is working out of their homes. But I love being back at home. This feels like home where I first started, and it was from my bottom up. And this is our new building. And I remember being excited in 2007 before the market it was January. It actually took me 2 years to get this building permits in the city, you know. Finally, after I got the permits, then I was worried about colors and walls and shapes and tiles, and it was so much fun. And November came around, and we moved in, and August 2008 came around, and it smacked the heck out of everybody. And I remember sitting in my office back there and saying, you know, I'm a pastor's kid, so I'm a big prayer. I'm sorry if I offended you. But I was like, oh, God, I've worked so hard. For what? Mm-hmm. This is all falling apart. And everybody that I talked to, nobody knew. So think of the worst scenario. This is what insurance is also about. You know, what's the worst scenario and how can I insure it? Well, same thing with funding. What's the worst scenario? How much money should I get before I put myself in a situation that I cannot repay and lose my home? You want to start a business to build it and have a home, but life interrupts. Anyway, I think that we did fantastic. Thank you, Anna, so much.
Thanks so much for having me. This was so much fun. This is my first Facebook Live.
So if you have any questions, please inbox me. Put your questions right there on Facebook. This will be on YouTube. It will be, you know, going all over the place so that if you missed anything, take your notepads, write down all these information. This is crucial information for not only your business plan, but really planning for your business to grow. So thank you so much. This is Esther Tanez.
Thank you so
and
much.
And Anna Masker. Two powerful girls who love business. Can you believe it? We love business. And have a fantastic day. Take care. Bye-bye.
Take care.